We just got the business confidence and business conditions numbers, and they were pretty terrible. GDP was pretty terrible. You've got McKinsey calling Australia an economic problem child, and yet inflation for Governor Bullock and the RBA is still too high for them to move quickly.
Well, that's right, and I think that's what we're going to hear from them today as well. The story here is that demand has slowed down in the economy. That's definitely true, and the indicators you're pointing to tell us that demand has weakened. But the supply side of the economy has been very weak as well. Productivity has been going backwards. Last week's GDP numbers told us productivity was falling, and as we know, if you want to get inflation down, you either slow down demand or you speed up supply. So we've slowed down demand a bit, but the supply side is so weak that inflation's taking a while to come down. It's proving to be sticky. It's still too high for the RBA.
We have another wave of China enthusiasm, expectations of stimulus. Do you think that makes a meaningful difference for Australia?
It could do. We'll have to see exactly what it looks like. But yes, you're right. A lift in China's growth would be something that would be a factor for Australia. It would be supportive of the resources story, of course. And that would just be another factor that would potentially add to the RBA not being able to cut rates quite yet. As I said, you've got to slow down demand or speed up supply. If we do turn out to be in a bit of an economic upswing over the next few months, partly on the back of China's stimulus or partly on the back of the fact that the consumer is starting to spend a little bit more, then that just might delay the idea that the RBA cuts rates a little bit further, even further.
It's certainly good for commodities. As you can see, that's clearly the share market reaction today.
Yeah, that's right. It's certainly the news that we got from China about they're looking to bolster growth with more support, and of course that particular comment around the fact that they've shifted the stance of the monetary policy towards being modest loosening rather than being prudent and so on. That's all factored into some improvement, as you say, some lift in commodity prices, which is where you'd expect it to see it, and a bit of a lift in the currency as well. The Aussie dollar risk assets have improved a bit on the back of an expectation that we're going to see a bit more support coming through at some point.
How much is a bit? Does that Politburo change in tone affect your outlook for 2025? Does it meaningfully impact Australia, or is this marginal?
I think the main story for Australia is still a domestic story. And so, domestically, what we're seeing is that growth has been really quite sluggish as we've been trying to get inflation down. But as I noted, the productivity side of things, the supply side of the economy is also still very weak. So when we look into 25, we do think growth is going to pick up a bit. Partly that's because the government has delivered more fiscal stimulus. Public demand is running quite quickly. We're running towards an election in Australia by May of next year. So partly it's domestic stimulus and public demand that's supporting things into next year. And then on top of that, we do think that there's going to be a bit of support from that China story too, and we've got to watch out for how big that will be. The key challenge, though, is demand. If it lifts at the same time that inflation's still too high, this is going to mean that the RBA doesn't get to cut interest rates as soon. And so our view is that they're not cutting rates until, the second quarter at the earliest.
Oh, wow. So when it comes to what's happening in the U.S., how exposed is Australia to potential trade tariffs from the U.S. that could affect global economies? And what is usually the transmission mechanism into the Australian economy?
So the primary question here is, of course, what happens first in terms of trade policy from the US, but more importantly for Australia, it's then what we see in terms of the Chinese policy response, because it's China that's our major trading partner, and that's where the effect's likely to be biggest from Australia. So that creates a whole lot of uncertainty, as you can probably appreciate, because at first we don't know what the policy environment's going to look like with the new US administration, but then of course we don't know what the Chinese policy response is going to be. So particularly watching for what China's policy response looks like, how domestically oriented it is, how much it's focused on the consumer versus how much it's focused on infrastructure and housing, because that's particularly important for the hard metals and the metals that Australia exports. So it's that second layer, that second level, that's the secondary transmission through the impact on China that's probably the most critical part of the story.
Paul Bloxham, Chief Economist, Australia, New Zealand and Global Commodities at HSBC. And we have more on Australia ahead every Tuesday at 11:40 a.m. if you're watching in Sydney, 8:40 a.m. in Hong Kong. Plus, you can tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. Find it on Apple, Spotify, or Bloomberg.com.